Imagine a company that lost billions of dollars every single year, yet was once valued higher than Ford, higher than FedEx, higher than Ferrari. Imagine a CEO who owned a private jet, banned meat for his employees while eating it himself, and genuinely told his staff he wanted to end world hunger within 2 years. This is not fiction. This is the true story of WeWork and the man behind it, Adam Neumann. Adam grew up moving constantly, more than a dozen homes before adulthood, including time on an Israeli kibbutz, a community built on the idea that everyone should be treated equally. Adam hated it. He didn't want equality. He wanted to be exceptional, and he wanted to be rich. So in his early 20s, he left for New York with nothing but ambition. His first business idea was a shoe with a collapsible heel that could fold flat. It failed almost immediately, the design was clumsy, and one tester nearly injured themselves wearing it. But over drinks one night, a friend joked that baby clothes should have knee pads built in for crawling. Adam didn't take it as a joke. He trademarked the idea, raised a little money from family, and spent the next few years selling padded baby clothes at trade shows, standing out as a towering, booming-voiced salesman among rooms full of mothers. The business never really worked. Babies only crawl for a few months, so customers didn't need to keep buying. Adam was burning through cash with nothing to show for it. Then came the elevator meeting that changed everything. Adam struck up a conversation with a stranger named Miguel McKelvey, a quiet, introverted man who, like Adam, had grown up in an unconventional communal environment. The two became friends and started talking about ways to make money. Adam had heard about a business model where you rent office space, then sublet smaller sections of it to other companies at a markup. It sounded simple enough to try. They convinced a landlord to let them use an empty floor, wrote a business plan overnight, and launched a co-working space called Green Desk. The environmental branding was mostly for show, but the model itself worked. Small businesses and freelancers, especially after the 2008 financial crash, didn't want long leases and empty offices. They wanted flexibility, community, shared amenities, and a space that didn't feel like a cubicle farm. Green Desk filled up fast. Within a short time, the building had over 300 tenants. But Adam wasn't satisfied. He wanted to expand aggressively, take on new buildings, new landlords, new markets. His business partner in the original building was cautious, worried about the risk of signing long leases, while offering customers short, flexible contracts. Adam didn't want caution. So he and Miguel sold their stake in Green Desk and used the money to start something bigger, something with global ambitions from day one. They named it WeWork. The pitch to their first big investor set the tone for everything that followed. Before WeWork even had a single office open, Adam threw out a valuation of $45 million for a company that existed only as an idea. Somehow the investor agreed, putting in $15 million for a third of the company. That capital and the credibility that came with it opened doors to landlords who had previously ignored two guys with no real estate track record. Their first office was a run-down 6th-floor building in Soho, and they filled it partly by walking into a nearby coffee shop and asking freelancers working on laptops if they'd rather have a real desk and a community around them. WeWork opened officially in 2010 with just 17 members. From the very beginning, the culture was intense. Employees worked brutal hours, pulling all-nighters to get new floors ready, painting walls, and building furniture themselves. Yet, many of them loved it. It was young, social, full of free beer, arcade games, and a CEO who would skateboard through the office. Adam openly admitted he underpaid staff, but promised them stock options that would one day make them all millionaires. Most young employees had no idea how equity actually worked. They just believed him. And Adam was, above all, an extraordinary salesman. He didn't pitch WeWork as a real estate company because real estate companies get modest valuations, typically 2 to 5 times their revenue. Instead, he insisted WeWork was a technology company, a physical social network, comparing it to Airbnb and Uber. Never mind that Adam could barely use a laptop, or that WeWork's entire business depended on signing expensive long-term leases on physical buildings, something no software company ever has to worry about. Investors, especially venture capital firms chasing the next Facebook, ate it up. When journalists wrote that WeWork was really just a real estate company, the PR team called them and pushed to get it changed. To make the vision even more convincing, Adam would stage what employees internally called activating the space. Before investors arrived for a tour, staff would be told to throw an impromptu party, complete with free food, activity, and noise, so the office looked electric and thriving. Investors walked away thinking this was simply what WeWork always looked like. The company grew fast, and so did its losses, but Adam had convinced everyone that revenue growth mattered more than profit, at least for now. Major venture firms started competing to get in, each new investment pushing the valuation higher, which only made the story more convincing to the next investor. Adam also restructured his shares so that his votes counted many times more than everyone else's, meaning he could keep selling stock while never losing control of the company. As the money poured in, Adam started dreaming far beyond office space. He trademarked names for future ventures: WeLive for communal apartment living, WeGrow for a private school, even ideas for an energy drink and a movie studio, largely to help launch the acting career of his wife Rebecca, a cousin of actress Gwyneth Paltrow. Rebecca became increasingly influential inside the company, eventually being described as a third co-founder, even though earlier employees say she wasn't really involved in WeWork's founding at all. She pushed a spiritual, almost mystical tone into the company culture, banning meat company-wide for a period, even as Adam was seen eating it himself. The company's annual summer camp retreat became legendary, and not for good reasons. It featured A-list musical performances, unlimited alcohol, and mandatory attendance tracked with wristbands. Employees slept in tents in the mud, while Adam stayed in a private trailer at the top of the hill. Weekly all-hands meetings turned into rallies with tequila shots and chants of the company name. Former employees have since described the atmosphere as cult-like, with staff defending Adam almost religiously, some even getting his branding tattooed on their skin. Meanwhile, WeLive launched its first communal apartments, and some underpaid WeWork staff moved in simply because it was cheap and close to work. Many later admitted their entire social life, work, and home had become consumed by this one company. It felt suffocating. Behind the parties, the business fundamentals were getting worse, not better. WeWork was signing leases at inflated prices, offering months of free rent to lure tenants who often just hopped to a different WeWork location once the discount ran out. Occupancy numbers were softer than they appeared. A security flaw once let a data analytics startup working out of a WeWork office peek at the company's internal churn data, and when they published what they found, WeWork evicted them within 30 minutes. Layoff rumors leaked to the press, and by the mid-2010s, the company was reportedly losing about $1 million a day. Then came the meeting that changed WeWork's trajectory entirely. Masayoshi Son, founder of Japan's SoftBank and a legendary high-risk investor known for betting on founders rather than financial statements, met with Adam for what was supposed to be a 2-hour pitch. Son arrived running late and could only stay 12 minutes. He listened, then invited Adam into his car, pulled out an iPad, and started writing terms for an investment of roughly $4.4 billion, right there in the back seat. Adam signed on the spot. It was, at the time, one of the largest venture investments in history, and it pushed WeWork's valuation to $20 billion. Son became something of a father figure to Adam and gave him now famous advice: whatever your plan is, multiply it by 10. Go bigger, be crazier. For a man who was already the most extravagant founder most people had ever met, this was like pouring gasoline on a fire. What followed was a period of reckless expansion. WeWork threatened to bury small competitors by offering years of free rent to any company that would switch over, sued rival firms simply for using the word work in their name, and hired dozens, then hundreds, of new employees every week. They doubled their office count in a single year. They bought a stake in a Spanish wave pool company for surfers, acquired Meetup.com for over $100 million, and Adam even mused publicly about building a WeWork on Mars. By 2018, Adam had convinced Son to plan an even larger deal, an eventual $20 billion package that would have valued WeWork at $47 billion, more than most Fortune 500 companies. But behind the scenes, SoftBank's own financial troubles, falling stock prices, and skittish outside backers made the full deal impossible. On Christmas Eve, while Adam was in Hawaii, Son called to tell him the massive investment was off. SoftBank would still put in some money, but nowhere near what had been promised. Adam was reportedly devastated, and those close to him say his behavior became increasingly erratic afterward. With that funding gone and cash running low, there was really only one option left: go public. Taking a company public means opening the books completely, and what the world found when WeWork filed its public offering paperwork was staggering. The company was losing thousands of dollars every single minute. Adam had personally profited by leasing several buildings he owned to his own company and collecting rent from it. He had sold WeWork the trademark rights to the word "we" for millions of dollars. He'd requested voting shares worth 20 times a normal share, and even a clause letting his wife choose his successor if he died or became incapacitated. Instead of standard accounting, the filing introduced an invented metric that stripped out huge chunks of real expenses to make the company look profitable when it wasn't even close. The public reaction was brutal. Analysts mocked the filing. Journalists picked apart every strange detail. Landlords started quietly courting WeWork's competitors in case the company collapsed. Employees, who had been promised life-changing stock payouts, watched in horror as the planned valuation dropped week by week from tens of billions down to a fraction of that. Adam, usually a magnetic and confident speaker, seemed to unravel in interviews, at one point looking so disheveled that reporters speculated he might be under the influence during investor meetings. Within weeks, the IPO collapsed entirely, and Adam's own board, the very investors who had encouraged and enabled his behavior for years, turned against him. He was pushed out as CEO. But even in defeat, Adam negotiated an enormous exit package, tens of millions in consulting fees, hundreds of millions in loans, and the right to sell a huge chunk of his personal stock, all while employees were left holding stock options that were now worth almost nothing. The fallout continued. SoftBank had to inject emergency funding just to keep WeWork from going bankrupt immediately, valuing the company at a fraction of its former glory. Then the pandemic hit, and a business built entirely around packing strangers into shared office space became almost impossible to sustain. Long-term leases still had to be paid, even as tenants fled and offices sat empty. In 2023, WeWork finally filed for bankruptcy, closing the loop on a company that had once been valued at $47 billion. And Adam Neumann, he walked away extraordinarily wealthy. Within a couple of years, he was back, launching a new real estate startup, and remarkably, a major venture capital firm invested hundreds of millions of dollars into it before it had even properly launched, valuing it at $1 billion almost instantly. He even attempted at one point to buy the bankrupt remains of WeWork itself. The lesson in all of this isn't really about office space. It's about how a compelling story, told with total conviction by a charismatic person, can override common sense, financial reality, and basic due diligence, again and again, even among some of the most experienced investors in the world. WeWork wasn't really selling desks and community. It was selling belief. And for a remarkably long time, the world was more than happy to buy it.